Right now, Archer Aviation Inc. is trading at $11.57, marking a significant intraday surge of $1.39, which translates to a remarkable 13.65% gain for the day. This kind of explosive movement naturally draws a crowd, with traders on platforms like Robinhood and SoFi likely watching their screens intently. The immediate story is one of aggressive upward momentum, fueled by a torrent of positive news and a general sense of excitement around the future of urban air mobility. It's a compelling picture, suggesting a company on a clear upward trajectory. However, the reality behind this single-day rally is far more complex and layered than the ticker suggests. While the expectation is one of a smooth ascent, the underlying truth involves navigating a minefield of regulatory hurdles, intense competition, and the immense pressure of being a pre-revenue company burning through substantial capital. The prevailing belief among many retail investors, especially those engaging in online investing for the first time, is that Archer represents a ground floor opportunity in a sector poised to reshape transportation. They see the partnerships with giants like United Airlines and Stellantis. They hear about the ambitious plans for air taxi networks in major cities, and they equate it to getting in early on the next big thing, similar to the early days of Tesla stock. This narrative is powerful and easy to grasp. It's a story of innovation, of flying cars finally becoming a reality. The expectation is that the path from developmental test flights to a globally operational, profitable enterprise is a matter of when, not if. But this is where we need to challenge the common ground. The deeper, more critical take is that Archer is one of several key players in a high-stakes, capital-intensive race where the finish line is not guaranteed for anyone. Success is not just about designing a functional electric vertical takeoff and landing aircraft. It's about manufacturing at scale, securing an unprecedented level of regulatory approval from the FAA, building out extensive infrastructure, and achieving public acceptance. The stock's volatility is a direct reflection of this tension between the grand vision and the grueling, uncertain path to achieving it. Let's dissect the recent stock movement to understand what's really driving these swings. Today's surge isn't happening in a vacuum. It comes on the heels of a series of strategic announcements that have systematically built investor confidence. News of Archer's partner, Soracle, being selected to lead air taxi services in Osaka, Japan, was a major catalyst. This move positions Archer as the sole US-based eVTOL manufacturer with a direct line into Japan's forward-thinking urban mobility plans. The trading volume today has been immense, already surpassing 108 million shares, which is more than triple the average daily volume. This isn't just retail enthusiasm. This is significant institutional interest. We're seeing large block trades, indicating that major funds managed by firms offering services like Fidelity Wealth Management or those using sophisticated platforms like Interactive Brokers are actively building or adjusting their positions. This high volume suggests a conviction that the recent developments have materially altered the company's risk profile for the better. However, it's also worth noting the insider selling that has occurred over the past quarter. While not necessarily a red flag on its own, the sale of over 188,000 shares by insiders is a data point that sophisticated investors using Fidelity Brokerage or Schwab Intelligence portfolios would analyze. It injects a dose of reality into the overwhelmingly bullish sentiment, reminding us that those with the most intimate knowledge of the company are also managing their own exposure. This is the push and pull that defines a stock like Archer, a constant battle between headline-grabbing progress and the subtle underlying financial mechanics. To provide some foundational context, Archer Aviation is squarely focused on designing, developing, and eventually operating a fleet of all-electric aircraft that can take off and land vertically. Their flagship aircraft, Midnight, is a piloted four-passenger vehicle designed for short, consecutive trips of around 20 to 50 miles. The business model aims to replace 60 to 90-minute car commutes with 10 to 20-minute flights, targeting congested urban centers and airport routes. The company went public via a SPAC merger, a common route for speculative, future-focused companies, and has since been in a race against competitors like Joby Aviation to achieve full FAA certification. Past performance has been a roller coaster, with the stock price swinging wildly based on test flight milestones, partnership announcements, and broader market sentiment toward growth and tech stocks. For a long time, the company operated in a largely conceptual space. Now, with key FAA certificates like Part 135 and Part 141 in hand, which allow them to operate commercially and train pilots respectively, the abstract vision is slowly crystallizing into a tangible operational plan. The company's balance sheet is a critical piece of this puzzle. With a substantial cash position, it has a runway to fund its operations for the near future. But the burn rate is significant, with adjusted EBITDA losses widening in recent quarters. This financial reality is often overlooked by those caught up in the excitement of the technology, but it's a core consideration for any serious investment analysis, whether you're a self-investing individual or relying on investment help from a robo-advisor like SoFi Invest. Looking ahead, the future outlook for Archer is a fascinating mix of immense opportunity and substantial risk. The primary catalyst, the one that every single investor is watching, is the FAA type certification for the Midnight aircraft. This is the ultimate green light. Achieving this ahead of competitors would be a monumental advantage, likely triggering a significant re-rating of the stock. The company's strategic international expansion, particularly in the UAE and now Japan, provides parallel paths to commercialization and de-risks its reliance solely on the U.S. market. Furthermore, its deepening involvement with the U.S. military, exploring defense applications for its technology, opens up an entirely different and potentially lucrative revenue stream that is not dependent on the consumer market. These are the powerful tailwinds that could propel the stock far beyond its current levels. An investor using one of the many online investing sites might see these catalysts and view the stock as a strong buy. However, the risks are just as potent. The reality is that the FAA has never certified an eVTOL aircraft before. The regulatory framework is being written in real time, and any unexpected delays or new requirements could push commercial launch timelines back significantly, increasing cash burn and testing investor patience. Competition is another major factor. Joby Aviation is widely considered to be slightly ahead in the certification race, and a host of other domestic and international players are vying for a piece of the same market. Then there's the question of manufacturing. Partnering with Stellantis provides manufacturing expertise, but scaling production of a novel aircraft to meet potentially thousands of pre-orders is a colossal industrial challenge. Any stumbles in this process could erode confidence quickly. This is the side of the equation that requires careful consideration. I want you to think about this dynamic for a moment. Comment below. Do you believe Archer will achieve full FAA type certification for Midnight before the end of 2026? In summary, the story of Archer Aviation is a perfect illustration of the tension between a powerful futuristic expectation and a complex, challenging reality. The 13% surge we're seeing today is a reaction side of the ledger, the tangible progress in Japan and the successful flight tests that make the vision of urban air taxis feel closer than ever. It's a testament to the company's ability to execute on key milestones and build strategic partnerships. But the reality is that the most difficult and uncertain parts of the process are still ahead. The path to profitability is long and fraught with regulatory, competitive, and operational hurdles that cannot be overlooked. For those managing their own individual brokerage accounts or exploring investment opportunities through platforms like Fidelity Investments or Interactive Brokers, Archer represents a high-risk, high-reward proposition. The company is no longer just a concept on a PowerPoint slide. It's a serious contender in a nascent industry. The key is understanding that while the potential is astronomical, the journey to the sky is still being paved, and there will inevitably be more turbulence before any clear cruising altitude is reached. The stock's performance today is exhilarating, but the true test of its long-term value lies in navigating the intricate reality that lies behind the headlines. Don't forget to like, comment, and share. Disclaimer: this content is created only for educational purposes. It is not financial advice. Always analyze on your own and consult a professional before making any investment decisions.